Hey everyone, welcome back to Corporate Decoder, the place where we decode your favorite company's announcements. And let's just say this filing has a few surprises up its sleeve, or perhaps a few more shares to hand out. So, Capital One Financial Corporation, a name we all know, has dropped an 8K filing on the 22nd of January. 2026. Now, 8K filings are usually for big important events that happen between their regular quarterly reports, and this one is no exception. They are announcing a pretty significant acquisition. Before we dive in, if you dig this kind of straightforward financial breakdown, make sure you are subscribed, and hey, we've got a fantastic community over on Discord, linked in the description below. Come join the conversation. Alright, so what is the big news? Capital One is buying a company called Brex Inc. Now, Brex is a company that focuses on financial products for startups and growing businesses. Think of it as a specialized bank for the tech world. Capital One is shelling out a hefty sum for this acquisition, around $5.15 billion. That is a big number. And it is going to be paid for with a mix of cold hard cash, about $2.75 billion of it, and roughly 10.6 million shares of Capital One's own common stock. Now, here is a little technical detail that is important. The shares of Capital One stock being used in this deal are not being registered with the SEC. They're relying on an exemption under the Securities Act, specifically Section C. What does that mean in plain English? It basically means they are saying these shares are being sold to a select group of sophisticated investors as part of this acquisition, not to the general public. So no need to go through the full registration process. They're also quick to mention that this filing, including the press release attached, is just for information and isn't considered officially filed in certain ways. To give us a bit more color on this deal, Capital One and Brex put out a joint press release. This release is attached as an exhibit to the 8. It is always good to see what both sides are saying about a big deal like this. They are clearly excited about the potential synergies and how combining their strengths will benefit customers and shareholders. Let's talk about the actual securities that are registered. Capital One has common stock listed on the New York Stock Exchange under the ticker symbol CORP. They also have several series of preferred stock, series I, J, K, L, and N, all represented by depository shares. And for the debt folks out there, they have 1.650% senior notes due in 2029, also trading on the NYSE. This shows the breadth of their financial instruments available to investors and how they manage their capital structure. Now, while this filing is focused on the acquisition, it is worth noting the broader context of Capital One. They are a major player in the credit card industry, and they've been making strategic moves to diversify and strengthen their position. Acquiring a company like Brex signals a clear intent to capture a larger share of the growing startup and technology market, a segment that is often characterized by high growth potential, but also higher risk. This move could provide Capital One with access to a new customer base and innovative financial solutions that complement their existing offerings. Looking at this from a strategic standpoint, Capital One is clearly trying to stay ahead of the curve. The financial services landscape is constantly evolving, with fintech companies disrupting traditional models. By acquiring Brex, Capital One is not just buying a company, they are buying into a future vision that includes serving a rapidly growing segment of the economy. This can help them avoid being left behind by more agile competitors. Of course, any acquisition of this size comes with risks. There are always integration challenges, and it is never a guarantee that the projected benefits will fully materialize. Regulatory approvals are also a key factor, and while they are moving forward, these processes can sometimes be lengthy and unpredictable. The market competition is fierce, and Capital One will need to execute this integration flawlessly to outshine rivals, also eyeing the fintech space. So, what is my take on this filing? Capital One is making a bold move, demonstrating ambition and a forward-looking strategy. The acquisition of Brex, while substantial in cost, aligns with the trend of established financial institutions seeking to embrace innovation and new market segments. The use of stock in the deal can be seen as a way to conserve cash, while still providing significant value to the acquired company's shareholders. The key will be in how well they can integrate Brex's operations and technology into their existing framework. If they can successfully leverage Brex's expertise in serving startups, this could be a game changer for Capital One, opening up new avenues for growth and profitability. However, the success of any acquisition hinges on effective execution and the ability to navigate potential headwinds in the market and regulatory environment. Alright, that is our breakdown of Capital One's latest filing. What is your take on this acquisition and what it might mean for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.